Hello and welcome to Motley Fool Conversations. I am Motley Fool contributor Rich Lamello, hosting alongside Motley Fool analyst Buck Hartzell. Today's guest is someone who's made a career out of making complex ideas not just understandable, but genuinely fun to learn. Charlie Wheelan is a best-selling author, educator, and economist whose books Naked Economics, Naked Money, and Naked Statistics have helped countless readers grasp the real forces shaping our world. He's a senior lecturer at Dartmouth, a former correspondent for The Economist, and a passionate advocate for economic literacy and political common sense, something he championed in his book, The Centrist Manifesto. And as if that weren't enough, he also took a year off to travel the world with his wife and his 3 teenagers, an adventure he chronicled in We Came, We Saw, We Left. Charlie Wheelan, welcome to the show.
Good to be back with you.
Thank you. Thank you for joining. And I'll say in my office, I actually have one of your books right here on business writing. And it's hard to find, books like that. And I had a really good friend from business school who I helped move decades ago. And he yelled at me because he said, "You told me to throw away this one book that I had on business writing, could never find it for my kids." So he's going to get one of these for free in the mail from me. So thank you, Charlie.
Very good. There are 2 times in my life I've written books because I went looking for them and no one else had written it. The first was Naked Economics. I was teaching a course for journalists. I'm like, I just need a book to make them understand the big ideas. My agent said, there isn't one, you're going to write it. And the next one, after I've been teaching for 10 or 12 years and was frustrated by the quality of writing, I just wrote the book on writing. So it's just like being an entrepreneur. You fill the vacuums.
Well, I've got lots of marks in there. I haven't finished it all, but I'm about a quarter of the way through it, and it's got great stuff in there. So, I'm going to start off with economics, though, because, that's front and center. I mean, you can't, pull up a news site or look at the newspaper and not hear of some changes. I'm going to start off, first of all, with tariffs, because obviously there's been, since April 2nd, so-called Liberation Day, there's been a lot of changes in tariff policy. So maybe just for kind of our listeners, can you give us an idea, like what is a tariff? And then we'll talk a little bit more about it. But I'll say, first of all, just kind of what is a tariff?
It's a tax. It's a tax on something that is imported. It's an age-old tax because back before we had the capacity to do income taxes or sales taxes, the easy way to collect a tax was with customs houses. So if you go to any big old city, there's always some beautiful building. It's the customs house. Where are we going to get money from the ships that come in that are selling tea or wool or something else like that? So it's an age-old way of taxing things that come into the country. It is paid by the people who are actually bringing it in. But that's what we call like the statutory incidence. That's who actually writes the check. Yep. But I think for your listeners and to understand the issue, there's a more important concept, which is kind of what's the economic incidence? So who actually bears the cost? It's not the same. So I'll turn your attention to something that most people are more familiar with, which is something like a property tax. And you say, well, who pays the property tax? People who own property. But then if you say, well, I'm a renter, so I don't pay property tax, that's not true because your landlord pays it and then passes it along. So the big economic question right now is how much of these tariffs are getting passed along and to whom? And that is a very complicated but very important question.
Yeah, that's a great one. And I want to get to that question, first of all, because I know there's been a lot of talk from different companies to say, and pressure from the president, Donald Trump, to say, I don't want any of you guys raising prices, right? I'm going to introduce these tariffs. And some of these businesses aren't super high margin businesses. And so they're kind of left. And I think Amazon was in the newspaper, a couple of weeks ago saying, hey, they said they wouldn't, but they raised prices on a lot of different products. And so that's an important question. And we'll see how long those companies can kind of hold that balance. But I want to talk about, Warren Buffett said something I thought was kind of interesting. He said, I guarantee you that these tariffs aren't paid by the tooth fairy, right? And so that does get at your question. And the worry, I think, has been put out there is that the companies are going to raise their prices. They're going to pass it along. And ultimately, us as consumers are going to have to eat that bill. Do you think that's the case? Or do you think it's going to be a mix that the companies eat part of it? And then how do you think that'll play out?
It's definitely going to be a mix. And it depends on how competitive the industry is. It depends on how competitive the imports themselves are. So you can kind of think about, broadly speaking, 3 entities who might end up paying. It might be the exporters. So It may be that I'm going to stop buying products from Vietnam if they're 50% more effective, so the people exporting shrimp from Vietnam say, okay, we'll eat the tariff and we'll reduce our take, and so your price will be the same, in which case that's all being borne by somebody else. I don't think that's necessarily the case. Or it could be the importers themselves. It could be the wholesalers who buy the shrimp who say, we can't afford to pass this on because nobody will buy our shrimp, in which case they eat it. Or it could be the consumers. They just pass it all along, and now shrimp are 50% more effective. My guess is, depending on the industry, it's going to be some combination of all those three things. But I can guarantee you that some of it, if not most of it, is going to ultimately be borne by people going to the supermarket or by companies manufacturing, importing capital goods. At the end of the day, it's going to affect American consumers. It's just going to be more in some places than others.
Right. Yep. And I want to say one more, and I'm going to turn it over to Rich then for the next question. In 2024, we had a trade imbalance here in the United States. It was about $1.2 trillion. And I just saw, I think last month or so, they reported that we took in $28 billion extra. And my question for you is, in simplest terms, if we run a negative trade imbalance, does that mean we're getting ripped off by other countries?
No, it definitely doesn't. One good reason you might run a trade imbalance is, say, if you're growing really quickly. So my recollection is that the United States ran big trade imbalances in the 19th century because we were building railroads, we were building canals, we're making all these other capital investments that took a lot of our internal capital. So in the process, we had to kind of borrow money from the rest of the world, buy more from them than we sold to them. And it made us a more productive country in the long run. If you think about it on an individual basis, and there are limits to that comparison, but should you be spending more than you earn? And the answer is it depends. If you're spending more than you earn because you're borrowing to go to medical school, bring it on. If you're spending more than you earn because you want a bigger television and there's no prospect that your income's going up, you probably have just borrowed against the future and won't be able to pay it back. So there's nothing inherently wrong with a trade imbalance.
Right. Yep. And I think, somebody has said that, Japan in the 1980s, there was a lot of worry about them kind of taking over, and they were buying chunks of our country. And certainly there's been a lot of focus on the auto industry here as of late. And Japan passed the United States as a much better producer of cars long ago. And yet our GDP has grown much faster than Japan since the 1980s. So we've run a negative balance with Japan and done just fine, I think, as a country. So I think that supports that thinking. Rich, I'll pass it over to you for the next question.
Sure. Yeah. So, Charlie, in your eyes, I think you called tariffs economic self-sabotage. Can tariffs ever be justified economically, or are they always, like you said, self-sabotage?
I can imagine a couple cases where they could be productive. One would be if you were to tax carbon or something like that. And, I'm kind of an economic purist, as are most economists, including my former University of Chicago colleagues. And they would say, look, if you tax something, it does two things. It raises revenue, everyone knows about that, and it changes behavior. So in general, first order of tax policy is tax things you want to discourage. Tax smoking, not capital spending, and so on. Sure. So if we were to do a carbon tax, I think that's politically unlikely, but probably economically advisable, and other countries didn't, then what would happen is all industry would just move to India and pollute as much. So what you would do is you might do some kind of carbon tariff so that there was no advantage to polluting in some other country and then importing the products to the U.S. That's pretty targeted. I would ask the national security folks, when they look at countries like China or India, are there tariffs that might strategically affect our national security situation? But other than that, I can't think of too many cases where your run-of-the-mill economist of any political persuasion is going to say that tariffs are particularly good policy.
Sure. And you make a strong case in Naked Economics for free trade based on comparative advantage, like that whole concept of that. Why does that still generate so much resistance, political resistance, however you want to define it?
It's just such a counterintuitive idea. I think even Abraham Lincoln said, wait a minute, why should I buy rails for the railroads from England? If I do that, they get the money and we get the rails. But if we do it ourselves, then we get the money and the rails. Right? It's just why in the world should I buy pencils when I can make my own pencils and then I won't spend money on them? Right. The answer is it would take me all day to make a pencil and then I have no time to write books, which is what I'm better at. So the idea of comparative advantage is do what you're good at, let other people do what they're good at, and then you trade and everybody's made better off.
Yeah.
Yep.
Buck?
And I've had, somebody I spoke to in the business world that said, and this was a few years ago, they said, hey, anything with a high labor input, if it is over 20% of the cost of that good, it's going overseas. I mean, it's pretty much gone over now. And I think it's hard for people here when they hear at a high level that says, hey, jobs coming back. We want more jobs here, right? Everybody wants more jobs. Do we want manufacturing and all that kind of stuff? But then you have to think about the cost. Do you want to pay extra for that car? Or do you want to pay extra for that lawnmower or any of those other things? Because if our labor costs are higher, well, then it's going to get passed on, right? Ultimately to the end customer.
Yeah, I would add one other thing that I think has gotten way too little attention of late is that the big driver of job loss is technology, particularly in manufacturing. U.S. manufacturing is quite healthy when you look at the value of output, but the jobs are being destroyed by robots, eventually by AI, maybe already by AI. And so even if we do bring manufacturing back to the U.S., and if the tariffs are high enough, we probably will, most of the good jobs are going to be going to robots or relatively high-skilled workers who are going to be making a lot. It's not going to be going to the low-skilled workers who feel that they've been left behind, rightfully. So yeah. I think it's not necessarily a remedy that's going to bring back the manufacturing jobs that we've kind of glorified from the 1950s. Yeah. It's going to bring back the 21st century kind of manufacturing jobs, and it's just not going to help a lot of people without significant skills.
Yeah, and of course, there's a lot of fear by a lot of people around about the development of artificial intelligence, that it's going to take away, everyone's job. And what I say generally for folks is, yes, there will be some disintermediation there for sure. But if you look back at the early 1900s, roughly 30% of our people were working in agriculture. How many people work on a farm today? It's not much because we have tractors and combines and all this kind of stuff. You don't need as many people because we have a lot of equipment that can do the same job. Hopefully they're freed up to do higher level work and employment things for many of those.
Yeah, people. I mean, just think about a political campaign that someone might run to bring back 19th century agricultural jobs, right? Yeah, I'm going to put a hoe in your hand and you're going to be out there swinging. People think you're crazy. Yeah. And even manufacturing job, my colleague Doug Irwin, who is kind of the authority on trade, is we forget that most of these manufacturing jobs were mindlessly boring, dangerous, repetitive. Yeah. And so I think what we really want is the security that came with them. And that's a complicated, that if you went to work when you were 18, you could be guaranteed you had a job. It would be hard to get fired and so on. So I think people are conflating the economic security of that era with the jobs themselves, which for the most part were pretty lousy.
Yeah.
And on the back of that, what role do you think government should play in helping those workers who are displaced by trade or AI or tech or whatever?
Yeah, I think this is the policy goal here, the most important one. And I think it could actually appeal to both traditional liberals and conservatives in that the conservative argument for taking care of the displaced doesn't have to be a compassionate one. That's kind of the left-leaning reason. It's that, hey, if you like creative destruction, if you like all the good things that markets do, which is an amazing array of things in social progress and wealth creation, then the only way society is going to tolerate that is if you take care of the people who made the old mousetrap, right? We love that saying that if you build a better mousetrap, the world will beat a path to your door. True. If you built the old mousetrap, you're now living in a town that's shut down and you're devastated. So that's the conservative argument for taking care of those left behind. And then, of course, the liberal argument is more straightforward, which is tend to those people who are least well off. Right. But I do think that's a fundamental responsibility of government and probably a more constructive place to focus.
Yep. I want to ask you about debt, because this is something you kind of talked about with TVs and kind of borrowing at a macro level. I'm going to look at the whole country here. So we have the national debt to gross domestic product is now at about 121%. We just passed the new budget bill, which is going to, of course, expand the national deficit, though they chose some language and wanted to make things kind of sound a little bit. They didn't want to count the taxes that were being extended. And so Congressional Budget Office got a little bit of flack for that. But so Howard Marks, I spoke to him recently. He's a great distressed debt investor. And he said basically America has operated for most of the last 45 years like we have a golden credit card and it doesn't ever need to be repaid. So my question is, and this is one where what is the level of debt to GDP that you're comfortable with? And are we near or over that mark where we get to be a little bit uncomfortable? And what do you think we can do about that? I think it's a bigger issue. It wasn't certainly a big campaign issue this time around. But what are your thoughts on that?
I am a debt pessimist. There's no golden rule for the right proportion of debt to GDP. Judd Gregg, former senator from New Hampshire. New Hampshire's a small state. I play golf with Judd Gregg. He used to say, look, to get into the European Union, I think you couldn't be above 60% of debt to GDP. So he kind of threw out that number, acknowledging that it's somewhat arbitrary. You could also use, say, World War II as a U.S. sign point. People used to say, like, we're getting close to the rate of debt to GDP as in World War II. Now we've blown past it.
Yeah.
So there's no point at which people begin to panic, but we're all old enough here to know that at some point when people lose confidence, you don't get a memo that says, hey, by the way, next Monday, people are going to start bailing out of mortgage-backed securities. You just wake up and it happens. So I'm deeply concerned for a couple of reasons. One is I don't think it's sustainable. My favorite aphorism in economics is if it can't go on forever, it won't. So at what point do we stop? The second is I consider it to be kind of a barometer of political dysfunction, which is we can disagree about all kinds of other things, but I don't think there's anybody who is pro-debt per se. And the rising debt is just an indicator that the system we've got can't agree on a package of spending and taxes. You could have higher taxes and higher spending. You could have lower taxes, lower spending. There are a lot of right answers, but you can't go on spending lots and not taxing at a high rate. And that's kind of what we're doing. And to me, that's just a measure of our inability to solve that problem. And then you can extrapolate to a whole bunch of other problems that we're not solving. You're starting to see real interest rates creep up. That makes it tough for bond investors. It has all kinds of peripheral impact, those who are trying to buy a home, mortgage rates, and so on. So I am very concerned about the level of debt and our incapacity to deal with it.
What do you think that economic tipping point, just put on your prediction hat, what do you think that economic tipping point could look like?
I think it looks like a fragility that then gets knocked over by something else. You say,
Okay.
You think about a medical example, well, you've got weakness in your bones, when is it going to be a problem? Well, we don't know until you fall walking the dog. And then so the question is there a geopolitical conflict? So the world is so dangerous at present. China, Ukraine, Israel, Gaza. Is there something external that then topples the status quo in ways that spooks bond investors? Is there a small default somewhere else? Right? Is it a municipal entity or some big bond investor? So as well as I do that investors get spooked. The herd is quite dangerous. I don't know what could spook them, but they do get spooked.
Yeah. And if I could just follow up with one last question, Buck. Speaking of our debt holders, obviously we all know China, owns a disproportionate amount of debt. What is the concern that you're told that they play the long game? That all of a sudden you start to see the selling.
Yeah, you do not want to be locked in some kind of drag race where the person driving at you throws the steering wheel out the window. And one luxury China has is, I'm going to throw the steering wheel out the window. You're over there in the democracy. You're not going to get reelected if you throw your steering wheel out the window. So there's a lot of leverage that comes from willing to take a punch.
Right.
And if they're playing the long game, there's a story, I don't think it's apocryphal, about, I think it was the 1956 Suez crisis, where the British were threatening to get in a tangle in the Middle East over the occupation of the Suez Canal. The details are not important. What's important is the U.S. did not want the conflict. And what they said to Britain is, look, we are your biggest bondholders, and we can wreck the sterling, and we can destroy your debt if you do that. So there is precedent, even among allies, for using this kind of economic leverage.
Sure.
Yeah. Do you have any ideas how we can help politicians and both sides come together with some kind of reasonable resolution to at least stem the deficit some way? I mean, Warren Buffett 2 years ago, I was at the Berkshire meeting, and he's sold 600 million shares of Apple since that time, and he basically said, I'm doing that because rates have to go up. Tax rates are going to go up on long-term investments. Howard Marks said the same thing recently when we talked to him. He said, like middle America is going to pay more in taxes. It's not just going to be the wealthy. It's a big issue. I don't know when it's going to happen, but is there a way to incentivize those politicians? Because it's a short time. You're running for maybe 4 years, right? How do you provide proper incentives along those lines to have those people do the right thing, not for the next year or two, but for the next generation of Americans?
I have spent the last decade thinking about this. In fact, you mentioned, I think, the outset, the Centrist Manifesto. Yeah. I wrote that book. I've been thinking about it for a long time. The moment I sat down to write it was when the Simpson-Bowles process collapsed. And to take people back, it's almost nostalgic. That was when Erskine Bowles, who had been Clinton's chief of staff, Bill Clinton, and Alan Simpson, the Republican senator from Wyoming, so Republican and Democrat, both pragmatists, I would argue, got together. They kind of picked teams like PE dodgeball, so there were an equal number of Republicans and Democrats. They took it out of Congress and said, we're going to agree, this bipartisan group, on a series of things. There was some increases in taxes on the gas tax for environmental reasons and because it wasn't indexed for inflation, it had creeped down. They raised the retirement age on Social Security, which makes perfect sense. I remember getting off a bus in Chicago, buying the Wall Street Journal when they still had those little kiosks. Yeah. And they had a summary of all the things in the agreement. I'm like, yes, 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 yes. But then it went to Congress and it died. Obama wouldn't get behind it, nor would Paul Ryan. So the two most important spokespersons for their respective parties. That was when I said, okay, this is so broken. And that's what rolls up to your question, which is you got to fix Congress so that there's some political cover. And I've come to the belief that political primaries are the biggest problem in both parties, because you've got a promise thing in a primary where it's only the faithful of your own party that then shackle your hands to make the pragmatic decisions, particularly the sacrifices that you have to make to govern. So if you're a Republican and you take the Club for Growth pledge never to raise any kind of revenue ever, including closing loopholes, you're not going to come to a budget solution. Right. On the Democratic side, if you promise I'll never touch entitlements, well, healthcare is rising faster than inflation. We have an aging population. You're going to have to reform entitlements. And so you promise in your primary, now you come to Congress and there's no way you're going to get agreement. So somehow, and we can talk if you want about solutions because Alaska's gone to no partisan primaries. You got to change the incentives for who gets elected, and only then will you change the outcomes that come out of Congress.
Right.
Yeah. And actually, speaking of deficits, back in the 90s, we had a budget surplus, I think 3 or 4 years running. And that is, as far as I know, from I think 1970 until date to today's date. That's the only time we've had that. What will it take to get back there? I mean, obviously there was a confluence of things. The Cold War had just ended, so you could kind of ratchet back defense spend. A couple of different things happened there. But any thoughts on whether or not we can get back to that point?
I think you need dedicated leaders, intellectual leaders on both sides. I would go back even further to the 80s when you had the Greenspan Commission, and they kind of rescued Social Security with some hard decisions. And typically in those cases, you get a handful of people from both parties, usually in the Senate, because it's the more deliberative body, and they come to some deal, and then they sell it to their respective parties. But we've just come so far from that environment. They're all worried about getting primaried now, to go back to my last answer. Right. And I'm not seeing that bipartisan intellectual leadership because everybody's got to take a hit here. And without trust, you're not going to get to the point where the two parties have to backtrack on some of their key promises.
Yep. And you wrote a great book about statistics. So I want to throw out some that are a little bit of investing from the investors out here and just maybe get your thoughts on those. The first one is very recently margin loans where investors can borrow against their portfolio instead of like a home equity loan where they'd borrow against a house. They could borrow against the stocks that they already own. Margin loans exceeded $1 trillion for the first time. That's up 25% in the last year and almost 50% over the last 5 years. So about half of those margin loans. And the other statistic I'll throw out there is that companies are expected to buy back about $1.1 trillion of their own stock this year. That was from the Wall Street Journal. And so I just have a question for you. Those are statistics. Does that mean that we're kind of at the top of the market? Or do you read anything into those statistics or are those just numbers?
Yeah, it's curious about the buybacks because if companies are buying back shares, I presume they wouldn't do it when they're thinking that they're relatively expensive. They'd want to do it when they're underpriced. So I know I saw that headline. I literally was walking the dog, picked up my journal off the driveway, saw that. I didn't read the article, I would admit, but I was flummoxed by it. So I don't have an answer for that. It's a great question though, and it tells us something. So it's worth investigating. On the margin loans, I didn't know that statistic. Now you've just given me one more thing to worry about when I walk out of here, as if I weren't already worried.
Yep.
As I said, debt scares me. I remember probably on the Motley Fool, certainly in other shows, saying in 2005, real estate prices seem to be going up. I don't know how long they can go up. If they correct, it's not a problem unless people are over indebted, right? It wasn't falling real estate prices that killed us in 2008. It was people with 0% down who'd bought houses assuming they could flip them for more than they bought them for. So the margin loan figure, I think that, as I've already mentioned, the world is a scary place right now. You never know when things are going to correct. With that much margin debt and a frothy market, it is a recipe for some people to get burned pretty badly, which then spreads like wildfire to the rest of the economy.
Yeah. And I do have a theory on buybacks, and I have looked at a lot of data going back a long ways, and it turns out most companies are very bad at buybacks. But I'll give you my theory. I don't have any proof. But my theory is this. If you talk to chief financial officers, right, what do? They have to meet the obligations of the business and their growth prospects, and they do all those kind of things first. Once everything else is taken care of and they have money left over, they could either pay a dividend or they could buy back shares. They prefer buybacks, I think, for a variety of reasons. They're not committed to them all the time. If you start a dividend, you're kind of obligated to do it all the time. And so they tend to have the most extra cash sitting around when times are really good. So let's go buy back some more stock, right?
Yeah, I think it's a very compelling theory. I'm not sure it's great for business. But
no, it's not great for business. And most of the time they buy. In 2008 and 2009, when stocks got 40% cheaper or close to it, not many buybacks were happening, right? They weren't because everybody's scared.
They didn't have the cash. Yeah, I find the theory quite compelling.
The time or so before. So we'll see if it happens this time around, but that's my theory. Rich?
Yeah, I'll jump in. In Naked Economics, you talked about the government as kind of a necessary market referee. What makes a good referee in your eyes?
A good referee is one in the context of markets that makes them work as well as possible. So, for example, antitrust enforcement is really important. We can get in the weeds over how you regulate something as complicated as Meta or Amazon, but collusion, as Adam Smith warned us, is the natural impulse of people do business. I always tell my students, consumers love competition, producers do not. Yeah. And so, you got to do antitrust competition. There's a lot of rent seeking in the world right now. It's a kind of a technical term, but that's when powerful firms use government to advance their own interests. So pharma companies rightfully should get patents. That encourages innovation. Whether they should be able to evergreen them 56 times, by changing just the smallest parts of the pill, that's more questionable. Same with patent trolls and those kinds of things. So you got to kind of referee that to say, are we encouraging innovation and not allowing firms to discourage competition through illegitimate means? I think you've got to be responsible for human capital, right? Yeah. Back to our tariff debate, like the most important thing if you want to elevate incomes in the US is to give people the skills that will allow them to thrive, whether AI changes the economy or not. And that is not something the private sector is going to do alone. It can certainly be a part of it, but that's always been a fundamental responsibility of government. You got to build the infrastructure. Recently, I've been wondering if maybe the U.S. shouldn't have just nationalized our cell phone towers. Now that 20 years after I got a perfectly good cell phone connection in Cambodia, I'm wondering why. And, that just might have been something where there's a natural monopoly and we should have built all the towers and then let firms lease the space and compete on service. So there are a handful of things that are essential. Human capital, a safe and predictable regulatory system, a system that respects contracts and arbitrates them in a fair way, most of which, by the way, we take for granted. A sound currency would be another one, which is, I think, kind of a problem. When people complain about government, they're thinking about the line at the DMV. They're not thinking about the fact that most people still stop at red lights in this country. That's not true in many of the places I've visited. And so it's a little dangerous when people take for granted that the relatively good streets, relatively low crime rates, a remarkable patent and copyright system, a pretty good K through 12 system that still has lots of room for improvement, a remarkable university system that we're doing our best to kind of blow up from both the left and the right. So those are all things that I would describe as kind of the tracks on which the engine of capitalism runs. And that engine is remarkably powerful, but try running it without tracks.
Right. Yeah. And you gave a great speech on why we should love government. And I always say to people too, when sometimes they get negative about what's going on, America has some really big advantages that we have the world's best markets for trading stocks and investing in companies that are transparent and very liquid. We have a very big lead on a lot of very important areas of technology that's super important. And we have the world's reserve currency. Now, those aren't guarantees that they're always going to be that way, but those are three pretty big advantages. And I'd even mention one more, which is energy self-sufficiency. We have...
Right. Who would have predicted that 25 years ago?
Yeah, I remember reading books about peak oil and all this kind of stuff.
I think I probably wrote some of that.
Yes. Yeah. So technology, right? And horizontal fracking and all that stuff. So you can't underestimate the power of technology to change the way. And now we're looking at things like, autonomous driving and robots and artificial intelligence and all these things that could have the potential to revolutionize medicine and cure hopefully a lot of the problems that we have out there in the world. So I'm not a doomsayer. I'd say I'm an optimist. And, sometimes we need to be reminded that also there's reasons to love and appreciate government out there as well.
A couple of minutes ago, Charlie, we were talking about how, in the primaries, both parties are pulled to the extreme. And, you had some thoughts about, maybe ideas on the back of that. Obviously, polarization is a major issue. Is jungle primaries the answer, where you just kind of throw all the candidates into, one pot? What are some of the ideas you've had?
Yeah, so that one I think is probably the combination of effective and achievable. So there are a whole bunch of ideas out there that probably would change things, multi-member districts, but they require either action by Congress or constitutional amendments. It's just not going to happen.
Right.
And then kind of what's impactful, what will actually change the behavior. And I do think jungle primaries are open primaries where everybody runs in one primary election, one first round election, which sounds crazy, except that that's the way most elections are run. If a student council election didn't have primaries. Right. I describe our current primary system. Imagine you go to a high school student council election and the band nominates one candidate and the lacrosse team nominates the other. And you're like, okay, where did these candidates come from? Like, those are relatively small, extreme groups. And everyone's like, I want more choices. Right. So Alaska has done this. By referendum, this narrow referendum, they said, we're going to get rid of party primaries and we're going to have a single open primary. And the top 4 will advance. California does it. The top 2 advance. Louisiana does it. Top 2 advance. I prefer top 4 because it gives you more breadth. But then you got to figure out how do you pick the winner in that second round. It gets a little more complicated. Alaska does ranked choice voting. It's a little hard to explain, but once you've done it, it's relatively easy. You just rank your choices. Let's imagine that we did it in Florida in 2000 when you have Gore, Bush, and Ralph Nader.
Right.
And some people like Ralph Nader. Their second choice would have been Gore. So they go and they rank Nader first, Gore second. Well, the way it works is if nobody gets a majority, you knock off the last place finisher, which would have been Nader. They now get their second choice as their first. Most cases, it probably goes to Gore. Gore wins. And that's a way of allowing more competition without the spoiler effect, without saying, boy, I really like this person, but he or she's probably not going to win, and I might inadvertently elect that person I really despise, so I'm going to settle for the mainstream party candidate. So Alaska does ranked choice voting. Go ahead.
I was just going to say, I think New York City just did that in their mayoral primary.
Yeah, that's a little complicated. They did it in the primary alone. So they did ranked choice voting without the open primaries. I would have preferred that you kind of open it up to everybody.
Right.
But yes, that was ranked choice voting. In Alaska, I think it's important because we've seen it play out. Lisa Murkowski, who voted to convict Trump in his first term, was still able to get reelected in Alaska as a Republican because she only had to run in a statewide race. And it doesn't matter what you think about impeachment, doesn't matter what you think about Republicans. The point is she probably would have lost if she ran in a Republican primary, which is just some subset of the voters. But when everybody in Alaska was able to say, who do you want in the Senate? They said Lisa Murkowski. And I would argue she's then been able to operate more independently in the Senate. She's somebody who could do some of those compromises we talked about. If you're going to do a deficit deal or a Social Security deal, she's going to be part of it. But the reason she is liberated to be the kind of conservative she wants to be is because she knows she'll never be primary. And let me just say, we're all old enough that when we were young, primary was still just a noun and not a verb.
Right.
Yeah. Yeah. Well, I'm happy to hear that there's some changes going on. You know, I look even at professional sports. Baseball is the least one to make changes. They now have a pitch clock, and they've made,
and thank God for that.
Yeah, and they've made the game better. The football's messing around with the kickoff, you know, to make that safer for people so they don't get hurt, but still fun and enjoyable for us to watch. And even basketball has an in-season tournament and the play-in games now for making the playoffs. And I go, yeah, we had some unbelievably great people who wrote a constitution a couple hundred years ago, but we can make changes to the political system, right? It's okay. I'd like to see some smart people. I would nominate yourself and some other people to say, hey, we've had enough time now to see that there's some problems with our system. It's not perfect. Let's just see if we can make some tweaks and make it better. I love that. I love that about
so the book I'm working on now is Naked Government. So I am literally knee deep in the Constitutional Convention. Is what I was working on before I came to the studio.
Yeah.
And it is important to recognize that most of the people at the convention, the delegates, were not particularly pleased with the outcome. I mean, they kind of held their nose. The big states didn't particularly like the Senate. The small states didn't like the House. They were all worried about the strength of the executive. But they're like, yeah, okay, this is certainly better than the Articles of Confederation,
right,
which were failing miserably.
Yeah.
And so they said, all right, well, you know, it's good enough.
Yeah.
And it's proved to be better than that.
Right.
Yeah.
That's excellent.
Yeah.
Right.
I was actually about to ask the question, if you were to update Naked Economics today, what chapter or, you know, kind of issue might you add? But my guess is you're probably figuring out a way to work it into Naked Government.
Yeah, I think that the connection between the two that I've become fascinated with is just the connection between political freedom and economic freedom. So one of the things that Milton Friedman said, you know, he said a lot, much of which is memorable, but he also said economic freedom is a precondition for political freedom. And that in choosing a political system, we're also making a communal decision about how we allocate resources and income inequality. So I'm finding that there's more connection between the economic side of things and the government side of things. And of course, government makes all the rules, and economics pays all the taxes and creates the incentives. So, you know, I use the phrase political economy a lot more than I used to. It's kind of an old phrase, but it does explain this kind of inextricable link between the two.
Right.
Yeah.
Yeah. Well, that's great. I'm going to conclude here my portion with some buy, sell, or hold comments. So I think you're familiar with this. I'm going to throw out a topic. You can tell me if you're a buyer, a seller, or a hold. And if you want to add a few words of why, that would be great to hear. So first one is buy, sell, or hold social media as a source of information for people.
I'm going to sell, and it's going to mostly, this is a wish. This is one of those investments where I want to be right. I might not necessarily be right.
Okay.
I just, you know, it has been so damaging to so many things that we care about, everything from youth mental health to democracy to news gathering, that I would like to believe that we're going to be able to put some constraints around it that will make it better. What those look like, I have no idea, but I really think it's important.
Yep. Okay, good. Buy, sell, or hold AI, artificial intelligence infused robots or agents will be teaching many college courses at Dartmouth 5 years from now.
I'm going to hold. I do think that there's enormous potential for AI to enhance the classroom experience. I don't know that it's going to replace the professors. Maybe it's just because I'm the one sitting here. But certainly TAs, small groups, like there's so much you can do to amplify the learning experience, as with other kinds of technology. But I still think you're probably going to need some conductor orchestrating all that. So you might go to a model with fewer professors, with AI-assisted robots, which is kind of why I'm at a hold. But I do think there's a lot of promise there.
I'm going to point the lens at myself and Rich this time. Same question, buy, sell, or hold. AI investing bots and agents will be making all of your, Charlie's, investing decisions 5 years from now. You won't need the Motley Fool or anyone else.
I'm going to do another hold. I'm looking very cowardly here.
Okay.
we know that actually taking passion and emotion out of investing
Right.
is really good. There's a famous study I reference in Naked Economics where there's a group of people who have damage to a part of their brain. It was not an experiment. It was not deliberately done, but it affected their emotional capacity, and they turned out to do better at investing games because if it was a good bet, they made it. If they lost 9 times in a row, they didn't care. They kept making good bets. So I think that bots and AI could help enormously, but we're, again, all old enough to remember program trading and technology-assisted crashes. And so, again, I kind of want some guardrails, some adults in the room to make sure that our bots don't go in places that could be catastrophic, which I guess is probably the lesson for all of AI.
Right. Yes, I agree. And the stop loss orders didn't work out perfectly well for folks. Okay. Fully autonomous driving will be prolific by 2030. You and I will be able to get in the car, go to sleep, read a book, watch a movie. The car will take us where we want to go, and we don't have to worry about getting in any accidents.
I'm a buy. And it may not be for short trips to the grocery store, but certainly long trips. I mean, in some ways we already have it. It's called like a train. Right? So, it's certainly for trucking, for other kinds of things where interstate should be fully autonomous. They're going to be safer. It's going to help you merge. It's going to drive you 360 miles. So I would imagine some hybrid system where you're fully autonomous and then at some point you guide it off, to have your McDonald's or to get gas or something like that. But it seems like there's enormous promise for safety reasons, fuel efficiency reasons, logistical reasons. I'm a buy there.
Right. Yep. Buy, sell, or hold. Some U.S. residents will be living permanently on another planet within our lifetimes. We've heard stories about nuclear reactors getting put on the moon and that kind of thing, and traveling to Mars. We know Elon Musk wants to colonize these things. In our lifetimes, will somebody be permanently living on another planet?
Okay, I'm going to ask for the perspectives here. So are these people who've voluntarily gone like a condo community in Florida? So this is not like a space lab kind of. They've actually said, you know what? We looked at Connecticut, we looked at Florida, but Mars really speaks to us.
These are like the people on the Mayflower. They did it by choice for greener pastures somewhere up in another planet.
I think I'm going to sell. I mean, in part because I'm old, and so we're not talking about that much runway left. In my kids' lifetimes, probably, but it's not clear. I think we could probably get there, and we could probably set up the communities. It's just not clear you'd want to be there, right? You got to build the golf courses. You got to, I think it's more of a desire, not a technological capacity constraint.
And this one's about medical. This is my last one. Will we see a cure for cancer in our lifetimes? Buy, sell, or hold. The intersection of artificial intelligence, technology, the human genome being mapped, which had a lot of great promise, but we haven't seen a whole lot come out of that yet. What are your thoughts? I'm
going to buy. And the reason is that our understanding has come so far. And I've been admonished for saying cancer's really, there's so many different forms of it now, but the combination of mapping the human genome and then our capacity through RNA technology to deliver things that are way more targeted, I believe that is a very positive combination. AI then speeds it up.
Yeah.
And it may not be every kind of cancer, but I am deeply optimistic that our capacity to just stop the replication of those cells that would otherwise kill you will come an awful long way. It's going to the pace of change is going to be ever accelerated.
Yes. Yep. Yeah, we hope you don't ever underestimate the power of technology. Well, I thank you. That does it for me. I'm going to turn it over to Rich for a close or any other questions that he has, but I thank you very much for joining us, Charlie. We appreciate all your insights and wisdom. And Rich, I'll turn it over to you.
Yeah, thanks, Buck. Charlie, I'll just throw one or two buy-seller holds out at you. Do we, in the next 6 months or so, arrive at a tariff deal that's attractive for both sides between us and China?
I'm going to sell. It just seems like there are too many outstanding issues. Taiwan's lurking out there, and we haven't done anything on that.
Right.
You've got the human rights issues, which you haven't talked about in a long time. I think there's too much on the table to think, and the tariffs are just the most tangible sign of those disagreements. So I'm not confident that we're going to resolve the bigger U.S.-China relationship. And if we don't do that, then it's unlikely that we're going to come to a harmonious tariff deal.
Okay. And buy, sell, or hold, do we have a new Fed chair before May of 2026?
I hope not. I'm gonna sell. So I'm a Powell fan. In fact, by coincidence, I was in Chicago when he made that speech, kind of warning about the inflationary impacts of tariffs, and that was, I think, the first time he got the president quite exercised. So I think Powell has done a yeoman's job at the Fed. I think he's exercised independence, and most important, he's been a articulate defender of the importance of Fed independence, and it would be a real blow for the system to see that violated.
Sure. Well, Charlie, thank you so much for coming on the show. Ladies and gentlemen, please pick up any one of Charlie's books, Naked Money, Naked Economics, Naked Statistics, and of course, We Came, We Saw, We Left, and the Centrist Manifesto. And Buck is holding up another.
Yep. Right for your life.
There we go. Charlie Wheelan, thank you so much for coming on to Motley Fool Conversations. Buck Hartzell, thank you very much. Have a good afternoon.
Full on,
It
everybody.
was great fun to be with you guys. Thank you.
Thank you.